Hello and welcome back to Green Pips FX. And on today's video, guys, I'm basically going to be breaking down this massive strategy that I used to get this one hell of an RR in a span of 2 days. Now, let's get into it, right? So we're only going to be dealing with a 5-minute chart, right? That's the beauty of this strategy, only the 5-minute chart. So when we look at structure, right, we previously right here, so we're just going to follow this structure previously, so we can see that price had a series of had this uptrend going, and then this uptrend was broken here and price began a downtrend, which also led to the break of this overall low there. Okay, so if that happened, then price from that point here, price now started creating a, we know that price is now moving in a series of a downtrend, right? So from there we can see that price created a low, right, higher low, a low high, a low low, lower high there, probably low low there, and then if we just zoom in, we can see another lower high here, low low, lower high, and probably this lower low here, right? Just the overall one. So from there we know that price was pretty much ranging. So we know price is pretty much ranging from this high here to this low here, right? So price had this consolidation in here, and then lo and behold, at this point here, right, at this point here, this this high was broken. So price now initiated a higher high, right? So this could be marked as our change of character. So this right here, we could just mark this as our change of character from bearish to bullish. And from there, this was news, right? This was news movement. Price just came in to test this overall area of demand down here. Of course, we did not trade this. Why? Because this is just a news move. We only want to trade normal price action. So from there, what we can see is price. So price made this high, came down and formed this. So we'll take this one here as our overall low. And from this overall low, price came up and created this overall high here. So now we're simply in a range between this high here and this low here, right, with an area of demand, of course, which is this last sell to buy that could be refined to the 1 minute. Shall we get that to the 1 minute? Okay, this is pretty much hectic, but you know, it is what it is. So we could just simply go in there and mark this little guy here as our overall last down move before the up move, or even a deeper refinement into this area here, right? So we can now go back to the 5-minute chart. So we can only drop from the 5-minute to do some refinement, right? And from there we can now see that price comes in, taps our area very beautifully, and our stop loss, so just looking to protect ourselves just below the zone, and we're looking to target the highs, right? Or only looking to target the highs since we're aggressively scalping. So from there, price now gives you another break right here, this internal break right here, to create this high from this low, which could be just another re-entry right here at the retest of this overall last down move, right? Which could be another re-entry with a much tighter stop loss, right? But you know, we're not going to speak about that. Let's just stick with the basics. So this right here, this was our trade, and lo and behold, there it goes. So your take profit target gets hit, and from there we have now another break of structure to the top side, and this break of structure led to the formation of this high here, which initially came from where? This low here. So if we're looking to trade, we'll be more focused with this overall last down move before the up move, right? So let's take it from there, and if we just had a normal trade like that, stop loss at the low, and we're looking to target the highs. Now of course you can see that our stop loss got hit, but how did it get hit? But how did it get hit, right? We can just see that only a wick rises below here, and price ends up closing within the area. So this is just a simple concept of absorption, and of course we took a loss there, right? So we're gonna have this as a -1, right? A -1, and we're just gonna put this in here, right? And from here, this trade was a plus 7.2 RR, so we have a plus 7.2, right? Oops, sorry, 7.2 there. Okay, so yeah, we had a +7, we now have a -1, and now from here, look at what price does, right? So from there, with price closing within, price comes up, makes this internal break here, boom, just like this area here previously, this internal break to create this high from this low, and then from there we can now just see that price will obviously make a retest. So with this internal break here, price leaves this low here, right, that created this high, and price comes in to retest that area again. So after liquidation, price almost always leaves another clean entry. So there's our clean entry after liquidation, and there we are, targeting the highs, right? So we have ourselves now another break of structure. Oops, we have now ourselves another break of structure there, with a new high being formed, a high being formed from where? From this low here, right? And this trade was a +3.8, right? So now we have a +3.8 RR, right? Right there, right? So we're aggressively scalping, just targeting the highs, right? So we're just dealing the 5-minute, a break of structure, an area of supply and demand, and there's your trade. So from this low to this high, we can now see that the last down move that sparked the the up move for this area here, which of course is another entry here, right? So we have another entry here. So there we are, boom. So this is like a +2.3 RR. So basically you could just adjust this to like a +3 RR while taking partials right at this break of structure here, or placing your break even at this area here. So now we have another BRs here, right? So we like +3 RR trades going forth, right? If not, then we can just adjust them and dance with the break even, right? So from there, okay, so this trade here, it's TP right here. So of course this is a +3 RR. So now let's just keep it within here and just put it a +3, right? So a +3. There we are. Okay, so from there we have a break of structure from this low here that created what? This high here. Now, as you can see, the last down move, right? The last down move before the up move is this little area right here, this last sell to buy. So there's our trade. There's our trade right there. We're just looking to protect ourselves below the lows, and of course we're targeting the highs. So this is a +3.24. So let's just make it a +3.2 RR right there, right? So slowly we're pushing on, right? So there we are. Again, we have another break, right? It's an uptrend, so we're just focusing, where's the break of structure, where's the S&D zone that caused that break of structure, and from there we have our trades, as simple as that. Now of course we have this overall low that creates this overall high, but within here we can see that we had an intermediary break that caused this high here, this low right here, which mitigated this S&D zone here, and then this low caused this break of structure. So we're pretty much in a range from this low to this high here, right? If price wants to maintain its bullish structure, then it should stick within this range here with this low as our protected low, and then target the highs. But if we see a break of this low, like an actual break and not a liquidation break, then we might consider other options of turning into sales. But so from there, from this range here of this low to this high, right, we can now see that our most potent area, that the last sell to buy, was this area here, and lo and behold, this is another entry. So this is another entry there, and of course we're just looking to target the highs here. As you can see, take profit is hit, and that's a +3.65. so it's just this +3.6, right? You can just omit the further decimals and just take with one decimal, so it's a +3.6. and from there, look at what price does, right? So price comes in, right? It doesn't break structure just yet, sorry, oops. So price comes in, doesn't break just yet, leaves this wick, comes down, takes this liquidity, right? We can see that there was a channel built in here, right? Sell side liquidity, and that sell side liquidity is taken, and price from there breaks bullish again. So we have a potential break bearish and then an instant break bullish, right, to break these highs here, right? So what does that mean, right? That means that we're in a context of a very bullish market. I have explained this concept before of a double break, right? So you can have a break bullish and then an instant break bearish to signify very strong sells coming in. And so from there we have ourselves now a break of structure bullish. There it is, break of structure. Now this break of structure was caused by, price created this low, came up, failed to break, came down once more, and then from this low here, price now broke structure. So we're pretty much in a range of this low here to this high here, right? Because it's the low and the high that caused the break of structure. And from there, we can now just we can now look for that last sell to buy. Of course, now we can just refine this. It's if it's a very big of an area, but yeah, we can just refine it into this last bearish candle here, right? Leaving out the wick, so we can just refine it into there and now place our entry here, right? So that's our entry. Stop loss below the low, and of course we're looking to target the highs. Boom. So that's a +3 again. So we have another +3, and from there it's just the news that comes in and makes that big upwards push, towards new prices. And there are actually no real trades from here, since it's just a news push. Like I said before, we just want to trade the ordinary price action and non-news stuff. So we can just count, like from the beginning we had how many trades did we take? So we had about 1, 2, 3, 4, 5, 6, 7 trades. We lost 1 out of 7, only 1, guys, out of 7. So you can see the accuracy on this is absolutely bananas. And from there we can just pull up the calculator tool, right, and see how many RR did we get just from targeting the highs. Of course, there's an option, right? You can just take partials like 80% here and leave 20% running, meaning that all these trades here could have been running throughout this news here, and you could have gotten massive RRs from that. But just like I said before, we're scalping this aggressively using massive lot sizes, so we just don't want to lose what we get, right? We just take profit at the highs. But of course, you can do whatever you want to do, since this is no financial advice of any sort, and you are the one completely responsible for what you do in your own account and in your own charts. So let's go and sum up these RRs and be done for the day. So we had a +7 point, so we have 7.2 plus, okay, so it was actually minus, okay, no problem. So we could just delete that. So we had a7, okay, let me just do this and then clear all of this. So we had a 7.2 minus 1, right? We had a 7.2, we had a -1 here, and then we had a +3.8 plus 3.8, and then we had a +3, and then we had a +3.2, right, +3.2, and then we had a +3.6, +3.6, and then finally we had this +3. So we gained a total of 22.8 RR, and it's a span of, the first trade was taken on so this was Thursday, right? Of course it was the Asian session, so let's call it Thursday to Friday, right? So we had Thursday 9th March to Friday 10th March, 22.8 RR. Guys, this strategy is absolutely crazy. Now I hope this video was very informative to you. Of course, if you want to learn in depth how we do this, you're welcome to join us at Green Pips FX Academy. To get there, you could only DM us on Instagram at official Green Pips FX. All the links to our social medias are just below the video. You'll see some links there. With that being said, guys, if you enjoyed the video, then don't forget to like, subscribe if you haven't, turn that bell button for notifications. You know we drop this shit on a daily basis. Now, love you guys. Bye bye. Stay safe. Peace out.